Hey everybody, welcome. It's Pete. Today's episode of Today's Best Stock Picks will be a game plan for Wednesday, April 1st, 2020. Yes, we're finally out of March. It feels like it took forever to get out of March. I saw some memes today, people talking today is March 97th, 2020. It's been that exhausting of a month for everybody. I don't know about you, but I'm starting to finally go stir crazy being at home. Get right into the charts. First, I want to talk about if you day traded today on Tuesday. Challenging day today. It was not an easy day today. When you have a day where you put on the right trade and it doesn't make money, put on the right trade and it doesn't make money, you got to pull it back a little bit. You got to recognize that as a trader. There's that fine line between being flawless and following your plan and knowing when to take a step back. Because when you place a trade and it doesn't make money and it's the right trade, and you place another trade and it doesn't make money, which we had a lot of that today, and I'll get into that in a minute. You have to be aware of that while it's going on and not at 4 o'clock in the afternoon and say, I can't believe I kept pushing it. It's a really, really big part of trading. But first thing we're going to start out with today is I get a lot of requests for talking about a little bit of a bigger time frame and how to keep things simple to really have a good idea of whether or not you should be long. If you remember the terminology we use, long means you're a buyer, or if you want to be short, it means that you're a seller, a short seller. So we're actually going to take a look at a longer time frame in Caterpillar to use as an example so that you can game plan with me. And if you have any questions or stocks you want me to take a look at, definitely leave a comment. And if you find the video helpful, it would mean the world to me if you click to subscribe. So what I'm going to do now is I'm going to share the screen. We're going to go straight into Caterpillar as an example. And then we are going to get into a few stocks that I feel are going to be exciting to look at tomorrow. So as you can see here, we are looking at the monthly chart of Caterpillar. And this blue line right here is representing the month of March. So that's where price action opened in March. So the very first thing we want to do is you want to say, if I'm going to read the tape, if I'm going to use a significant reference point to say, is price moving closer to or further away from that, and bigger money, which over a month is bigger money, right? We're going to use the opening price for the month as the very first barometer. Now, we're going to expand on that a little bit. And if you remember what I talk about all the time, our job as traders is to build an argument for a trade. So again, we're going to start at the bottom where the worst reason in the world is I have a good bull flag or a bear flag. That's not a reason to get into a trade. That's a signal. Or even just slightly better than that is I have really good support. I could bid that support. Well, really good support without good order flow, without well bid, without well offered, without a reason to get in, without looking to the left and saying, wow, buyers are obviously in charge of this stock. And if I bid in this area, I feel comfortable I'm going to get follow through. That's where you work your way from your best trades, where you have a great argument, all the way down to those trades that are costing you money that you shouldn't be in the first place. So we're going to go right back to Caterpillar, and we're going to start to build an argument in Caterpillar, both from what happened previously and what's going on now. So again, coming into the month, like tomorrow, it's going to reset, right? Tomorrow is April 1st. The monthly calendar is going to reset. The monthly charts are going to reset. So in here in the month of March, coming into March, you can see that we were actually well offered coming into the month, which means lower lows, lower highs. We're also well offered here. So 1 month, 2 months coming in. So we're starting to build that argument a little bit, right? So you should coming in looking for sell shorts. So sell shorts meaning we're believing the price is going to go down. You could either sell stock or you could buy puts if you believe the price is going to go down. So now we zoom down into a little bit shorter time frame to see if the weekly charts are doing the same thing as the monthly charts. And that's going to help us build the argument to say, okay, that's working the higher time frames. What's going on now on the weekly chart? So as simple as clicking over on the weekly. And now you can see here, this is the opening candlestick. And the following week, the second week of March, which obviously the market collapsed, we should have still been looking for sell shorts again. So you remain short in this case until you see something change. So the question that comes in is, well, what does that mean to change? What would make me change my bias to no longer want to be looking for shorts on the daily charts to look for a swing trade? So in other words, what happened? What changed? And again, you need to know this before you get in the trade. If this happens, then I'm doing this. So if we stay well offered on the daily candlesticks, I'm going to continue to look for shorts as long as there's room to go. If we don't stay well offered and something changes, such as we close above the opening price, or we're trading above the opening price on the weekly candlestick, we make a higher low on the weekly candlestick where they didn't push down, that would make me change my mind. So you can actually see that ended up happening here, where we did not push down and make a new low here in this particular week. Not only that, but we traded above the open. We had an inside candlestick here which went well bid. So well bid. Now all of a sudden, longer time frame, because we know we're below it. Here's the monthly opening price. So what do you do now? You have a conflict. You have a conflict between what's going on in the shorter time frame with the longer time frame. So remember, we want to build an argument from our awesome A+ trades. And then as we move away from those A+ trades, here's a big thing you want to do, and you want to make sure you write this down. Anything that's not your A+ trade and you start to work your way away from that, you have to start to reduce your exposure, reduce your leverage, and work the orders a little bit better, because it could still be a valid trade, but not have the same probability for follow through. So in this case here in Caterpillar, when it pushed down and turned around, or when it pushed down and did not make lower lows and lower highs on the weekly chart, now you have to say to yourself, okay, is it a long? It's probably not a great long just on that inside candlestick. It could just be a pause waiting to push down. But then when the following week actually made higher highs and higher lows, which we call well bid, now you could contemplate getting long on top of while the market's rallying. So again, we're building the argument that the market's rallying, the stock's rallying, stop going down, 2 weekly candlesticks. Maybe on the daily candlestick, something is interesting where maybe we could take a momentum trade long, which is not a longer term picture. Because you remember, if you're watching the videos, our argument is based on how much money did the market, how much money did the smart money invest to create that pattern? Was it 2 days, 2 months, 2 years? In this case, it's a week, 2 weeks maybe, right? So if we go back to the daily charts to take a little bit deeper look, so on the weekly charts here, we didn't push down. We had an inside candlestick. And if we go to the daily charts, you get a pretty interesting picture here now. Look at all of the times that the stock is closing above the open price and cannot make new lows. So the story in the stock is changing despite the fact that we are still trading below the monthly candlestick. So the monthly candlestick is telling us short sale. The weekly candlestick was a short sale for the first week after we pushed down. Then the weekly candlestick went inside and reversed. So now you could possibly be looking for something like a swing low for a trade where we went from 92.50 to 117.50 with reduced exposure for that very short window. So I want to make it clear, though, this was an instance where it reversed. If it doesn't reverse and you get some really clean price action like we had over here, which was just incredible, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks in a row of well bid closing above the open. So this was kind of a tricky one where you really had to be on top of it. But if you were paying attention and saw the same exact thing here and we were having these same types of calls, you'd be able to look at that and say, I know exactly what I'm doing. And here's the key. I don't see a reason to exit. Don't have an itchy trigger finger if the market is telling you stay away. If it's still well bid on the weekly, if it's still well bid on the monthly, if we're still closing above the open consecutively, if we're trading above the previous close, above the previous high, above the open, everything is still green in this case. On the other side, it changed. So it's kind of cool. I wanted to start out with Caterpillar to use an example of a tougher environment, recognizing when to turn around or do nothing. You can make the decision too. Well, if I'm only trading with the order flow that's looking in the same direction on the higher time frame, we had weekly well offered, monthly well offered, monthly well offered. You could choose to ignore any reversals and just say, I'm not doing anything until the week turns around to the other side. So if we go back to the chart here, you might be saying to yourself, well, I'm below the month. I'm not doing anything unless I see a weekly candle that's showing lower lows and lower highs, and you could have chose to do nothing, and there's nothing wrong with that either. I just wanted to point out both and how to ultimately manage those positions, both from a monthly top-down perspective to what you need to see on the weekly. And again, if this happens, I'm definitely doing this, which could be staying on the side as well. What do you do if it happens? What do you do if you don't? And remember, we've drilled this in over and over again. And again, I paid for these losses in my years of trading. I'm trying to impart how to get profitable quicker. The more you stay away from trades that don't make sense, the easier it's going to be for you to make money. No doubt about that. So what we're going to do now is we're going to jump into some trades that, sticking with what happened in the market today, we actually ended up almost producing another inside candlestick, but a lot of people, including myself, thought we were going to kind of punched through, and we actually ended up failing at the highs and reversing. So now we actually have what I call a bearish U-turn, where we traded through the previous high, reversed. You caught all those people kind of off guard, right? Now, what are you doing? There's a lot of buy stops that trigger at the previous day's high, looking for the next level up, right? So what happens now? Now what we're looking at is we are looking to see if we open flat or lower, looking for a potential retest to the downside. Now, again, let's put this in perspective. If we look at this on, say, an hourly chart, we probably see 3 days worth of price action really not going that far, right? So we don't want to blow things out of proportion, because you could definitely make an argument that this day, this day, this day, and this day, the last 4 trading days were basically the same price action. So to really have an opinion or a bias on what's going on, you need to crack this price action. So other than maybe one little blip, right, 1 hour where we got above, and let's see, maybe this 1 15-minute window here where we're below, that's pretty much the price action. So we're looking at 252 to 262. So again, I'm going to pretend that we're in my trading office together. If we're trading together and we're making our game plan for the morning, I'm going to tell you, SPY is stuck between 252, 262. It's a wide range. You could probably trade some shorter term trades if you drop down your time frame. But if you're looking for a longer term trade, swing trade, something can hold for a week, something can hold for a month, we need to get out of this range. Let the market tip its hand and close above that level. Then we'll get aggressive. So that's what we're looking at in the SPY. So from a top-down perspective, not much going on in the market until we crack one of these levels. Everybody understand that? Right now, that's the right price. Whether it goes up or down, it's not our job to predict. It's our job to put the pieces together. And right now, the pieces are, that's the right price. So what does that mean? Perfect trade, market, sector, stock, all on the same page, everything doing the same thing. But right now, we're working away from that. Right now, the market's not helping. We did have that multi-day rally, and now we're kind of going sideways. Still have a little bit of indecision. So if there's indecision in the market, we have to pull ourselves back and say we're not at perfect, but we could still take some good trades. So good trades, a little bit less than perfect. We can still take them. Maybe a little bit less share size. Maybe look to book those profits a little bit quicker, because we don't have all that money on the same page. Remember, that's the biggest part of the argument. That's the best part of the argument, where the market, multiple markets, the NASDAQ, the SPY, the Dow, the Russell, all doing the same thing. Your sector's doing the same thing. Individual indices doing the same thing. And then multiple stocks in your sector are doing the same thing. That's perfect. You can size up, hold a little longer, maybe even have more position. We don't have that now. So remember, taking that into Wednesday. So going back to the charts, we're going to take a look at some individual shares to look at. We're going to go back out to the daily charts, because that's what you guys want to see, right? Some trades. We're actually going to start out on the short side, because we had some stocks that were relatively weak that broke down. And you can see a little bit longer term picture here at Dollar Tree. You'd think Dollar Tree would be doing great right now, but I guess all retail is getting hit. We actually closed down 8%. That's a monster move in any stock, never mind in this environment right now. So what we're actually looking for in Dollar Tree is, I don't usually use the low all the way down here. I use where most price action. It's not coincidence right here, 66. So we have roughly a $7 move to the downside in Dollar Tree. Best case scenario, open flat and start trading below the open and continue to push down. Another one we have is Twilio. Twilio actually filled the gap. So we've got to be conscious of the fact that we gapped higher, had a nice momentum push higher, and gapped down, held the gap. So I like Twilio on the short side, but only if it's below the open price. If this thing rallies a little bit, I'm letting it go. So you got to have that if-then scenario. If it does push down and go, we actually got room all the way down to 67.50. So almost $20 there on the downside, depending on where it rallies. So this is going to really, the next move is going to tell us, was this short covering or was this new buying kicking in? We'll see tomorrow, right? And the last one on the short side that I'm going to take a look at is CapitalOne. Not as volatile, but still a $12 move if it does punch through to the downside. On the long side, I have one that's a trade setup and one I want to take a look at that we mentioned earlier today for a potential trade. And we nailed the profit target perfectly. But I want to talk about this one here in DocuSign first. You can clearly see DocuSign making new multi-year highs, right? We actually had this as a breakout because we were well bid, but look at what it did. It came all the way back to 92. I still like it. The fact that the stock closed up 5%, it was actually up a lot more than that during the day. Pulled back with the rest of the market. And let me just show you the intraday chart pretty quick. So you can see it had a nice spike and then kind of grinded its way down, lost its mojo there for a little while, right? I still like the stock long, but let's not forget the stock just went from 80 to 98. $18 move in basically 3 days. I want to see the stock hover at this level right around 92 and then look for another $10 to $15 move push to the upside. So we might have to wait a couple of days, keep it in our tracking journal, like I said today, but you can't ignore a stock that was up that much on a day where the market was kind of flat, if not negative, as we saw before. A couple of interesting stocks I want to talk about that a lot of people have had on their radar, these cruise line stocks, right? Now, on the surface, it doesn't look like it's anything exciting, right? But there is two things going on that I want to point out. Number one is what I call a failed test. Now, anytime you have a new 52-week high, 52-week low, you look for the low to be made, you rally off it, and you look for a failed test of the previous low. And then if you take out this level here, in the case of a long looking to buy, that would actually be the trigger, with below the low being the stop loss. So you push down, rally, fail to make a new low, and this here would be the trigger right around $18. What would the profit target be? Generally speaking, 50% from the previous move, which was, let's just say it was 52 down to 8. So it'd be halfway in between there. This is a little bit longer term trade. That's a monster move. It might take a little bit more time to unfold. However, here's something I want to point out that's pretty interesting. The stock did more than double its normal volume again today, as well as RCL. Now, again, you can make a case that they've been doing that all along. However, what's interesting now is we're starting to see what many would call accumulation. And accumulation essentially means that why am I having trouble here? Accumulation essentially means that stocks go sideways without any advance or decline. And in this case, because we're not seeing any further decline with a massive increase in volume, that would imply that the bulk of the smart money, and again, whoever the smart money is, it could be the consciousness of the market, it could be a bank, a hedge fund, it doesn't matter. It's the volume of the market, the sheer volume of the market, not letting it go and getting all that accumulation. So we have a failed test and potential accumulation here. Definitely two stocks to keep an eye on, right? So again, remember we said about building the argument? We also want to take a look at ExxonMobil. Obviously, the sector and the stock has been crushed as well. I'm keeping an eye on it over $40 for potential run to 54 if we get above that level. But you can see today we actually got down to there, punched up and came back again. So I want to see it comfortably close on the daily chart for a couple of days over that level. And the last one that I want to discuss is Netflix, because we also nailed this one as well today. We said we actually like the long, but we only like it as a one-day trade simply because this 38.50 or 385 has been resistance for a while. We haven't been able to get through this. So you got to respect the fact that where that's the right price, can't get through that price, get up there, book your profit, wait for it to get through there, wait for the price action to get through there. Then you look to reestablish a new position above that 385 level. So some key points there. I want to point out two things for those that are day trading on the intraday charts. The first one I want to point out is Apple. It was actually my pick of the day based on this inside candlestick breakout. And right out of the gate, it looked awesome. So I'm going to actually go down to the 15-minute chart. So you can see we actually got a really nice punch through the high of the day and out of the opening range. Now, there are a couple of trades intraday where you could justify getting long Apple. This one specifically here, and here's the biggest thing that I want to point out. If this stock explodes to the upside, comes out of a multi-day consolidation, has a really good $8 move, I think that was, maybe $254 to $260, roughly $8, $9. Buying this pullback, waiting for it to bounce and seeing it pull back and taking a loss, that's actually a good trade. It's a good trade that didn't follow through. So do not beat yourself up. It was a good play that didn't follow through. Again, we've talked about being mentally strong. You're going to get knocked around by the market. Be tough. Don't let losing trades bother you unless it's a bad trade. And a bad trade is one that is not following your plan. The last thing I want to do is I want to touch on some advanced stuff here in the SPY. And I'm just going to move this out of the way. Two things going on in the SPY here. We knew we wanted to go into the SPY long today. We were still well bid coming into the day and looking for the spot to get long. So you had a choice here. You could say, I'm going to bid this pullback in a strong stock and look for close above the opening price, which that's what this line is, or I'm not going to get long until it confirms it to get above the open. Now you have a choice. I want the conservative play, or I really like the long and I want to get long aggressively at a lower pullback with a clear entry signal, but I'm going to work the order. Either one is the right play. It completely depends on your conviction and how the market's unfolding. But here's what I want to point out again, because these things are super important to longevity in the markets, whether it's a 5-minute chart or a monthly chart that goes back 2 years. Another good trade where you actually got long, right? Made new highs, pulled back. You get long here. You're a buyer looking for a new leg up, right? But you don't get it. You actually retest the high. Now your spidey sense have to be tingling and say, I thought it should have went through to new highs. Everything looked good. I bought the pullback after made new highs, punched through and failed. Should you buy this next one? Absolutely not. The next long trade is you need to clear this level and stay there. And again, it doesn't matter if it's a 5-minute chart. It could be a weekly chart, a daily chart, very similar to what we looked at in Netflix a couple of minutes ago on the daily chart. When something fails and doesn't punch through, the next trade, you need to get confirmation from price action to get 1, 2, maybe even 3 closes above there in whatever time frame you happen to be watching. Now I want to finish up with this really advanced signal. Everybody knows, if you're watching the videos every day, we watch the opening price, right? Well, the market collapsed, and now we're working from A+ trades away from A+ trades. This is why we watch the opening price every day. We failed once, failed twice. Third time, we punch up, try and get through, and then we have an inside candlestick. This was an aggressive, and I say aggressive because of the order flow that wasn't there. You're just trading up the most recent price action, but it's a smart tape reading play that you're looking at significant reference points. We can't get through that price once. We can't get through it twice. We failed at the highs, came back hard. That's a short sale signal looking at the inside candlestick breakdown for $3. So what I'm trying to do here, what my real goal here is to really create a community where we could learn from each other. Again, like I've said, I've done this for years. I'm doing this for 20 years. If I can help you minimize your mistakes, and then together we work on being aggressive and understanding when the market lines up and there's good opportunity, that's the sweet spot of trading, where we fall in love with trading again, the first time all over again, right? So that last trade in the SPY, you might want to look at it on some of your own individual charts to see how stocks traded. See if you can pick something that was rallying or declining, tested that level again, couldn't get through that level again, and whether or not it set up a trade in the opposite direction. They're kind of cool to spot. Now, was that an aggressive trade because I wanted to be long in the morning? Not for an active day trader. An active day trader often will change his bias and change his or her mind as the day is unfolding. But here's the key. Like that, if it's not working out, you don't have an opinion, you pull the plug and it doesn't work out, you're out. In this case here, obvious line in the sand, the opening price kept holding as resistance after it collapsed, and then putting on that short sale. Really didn't have that much risk because it was an inside candle with the opening price right there. So hope we gave you some good lessons, gave you some ideas to take a look at for tomorrow. Have an awesome day. If you found the video helpful, absolutely please do me a favor, subscribe. If you have any questions, leave a comment under the video. And this is the game plan for Wednesday, April 1st, 2020. And it's not an April Fool's joke. Have a great day, everybody.